are live. Good afternoon, Quasar Markets Live. I am here with the disciple of trend himself, my buddy Charlie Moon from Prosper Trading. Charlie, how you doing today?
I'm doing great, sir. How are you?
Good. Kind of a boring day overall, though. I mean, I think they're all been talking to traders all around. Everyone just sort of sitting on their hands, waiting for tomorrow.
Yeah, you can kind of see it. We just started breaking to the downside, but we're in this kind of spin cycle. And you could tell the markets were trying to lift, but every time we were lifting, they were getting dumped on. So it looked like the markets were poised to take profits today, and we're probably going to be in this wait and see, mode until tomorrow when J Powell, the good old J Powell, is ready to just
Yeah.
start shaking things.
Yeah, I mean, do you have a feeling? I mean, I'm firmly in that 25 basis point camp personally. I kind of follow, me, I like to follow the smart men, and Stanley Druckenmiller literally broke into CNBC yesterday morning, called in the middle of their show and said, "You guys are idiots." It was 9% inflation, and they raised it 25 basis points. Now, because things are looking better and maybe they're going to move a half a point. So, and then
Yeah,
BlackRock, I saw made the same call. Those are guys I listen to
yeah.
personally.
The
uh,
CME Fed Watch right now is projecting, I think, a 62% chance we're going to see a 50 basis point cut. The rest is being at 25%. So they're saying for certainty that there's going to be a rate cut.
yeah,
Um, it's funny, because people have been screaming for a cut, right? And the Fed's been behind the ball a bit, and how's this going to be signaled? And that's kind of the interpretation here. I think that there is a chance, respectfully, that they could do a 50 basis point cut. And I think that it could be devastating for the markets. I think that the markets may digest that as a signal of, you know, potential panic.
yeah, stress,
The Fed is,
recession. I have that
yeah,
feeling myself. I probably am going to look to a YOLO to that side because I don't think, because I personally think 25 points and it's nothing burger till business as we've seen as usual, which is up five
mhm,
percent. But
right.
I think the opposite. If they do say 50 basis point, the sky is falling crowd is gonna hit that sell button as quick as that finger can get going.
Yeah, and I mean the markets are they're ahead of themselves. They've been pricing in three cuts pretty much the entire year.
Right.
So whether that's a base, whether maybe not three cuts, but they're definitely pricing in, in the range of around 75 basis points, even up to around one and a quarter. I think that's a little outrageous. I think if the Fed made that kind of a move, that would really spiral the markets down. It wouldn't surprise me if the Fed does cut not just September, but November and December and work on the gradual thesis of a quarter basis point, and then look at 2025 and say, well, let's see what's in store for us and how things go. The
I
median
agree
dot plot,
100%. That's
yeah,
what Steve and I were saying this morning. Yeah.
the median dot plot by the voting members have the interest rates at five and a quarter by the end of the year. So seeing them taking this really aggressive stance to lower rates, to the four or four and a quarter range, I just don't see it when the voting members are suggestively saying the median should be at five and a quarter for this year.
Yeah. I also think that there's a political aspect that they don't want to seem too political. If they go
Right,
50, then
100%. Yeah,
yeah, then start the Twitter wars again. So I do knock on wood, just hope for that sake because that rhetoric gets old after a while. Yeah, this is what Steve and I was saying this morning. I just thought two things. I've noticed when we've had those irrational, every single thing at 9:30 goes up, including gold, Bitcoin, the rot, the IWM and QQQ and SPY. That it's a trap, and it's played out over and over again over the last couple of weeks. When we get that muted start, we have a nice steady flow up through most of the day, as you and I had last week when we were on that Tuesday. We had a nice rise up all day. These quick bursts have been getting sold off pretty quickly.
yeah, yeah, 100%.
A big part of
You
that,
know,
right?
that's kind of been like that's kind of been the market in general over the last month, where things are so short term. And again, it's just this crescendo building up till tomorrow, and that's, I said to the room, at least to my trading room, this could be the most important FOMC meeting since 2021.
Oh yeah.
And it's not like we're understating it. There's a lot of anticipation, there's a lot of uncertainty, and the market, the way that it's been trading since May, June, has been a lot of establishment of short term. There's nothing that's really been sustaining and rallying outside of gold,
Right.
maybe the longer term dated bonds, but ultimately things are just very short term. The highest demanded names like Nvidia, Meta, just regurgitating up and down. Apple's kind of in that same sense. So, it just seems like everybody's just waiting to see what happens, and then they're going to decide what they're going to do. And we haven't even really like talked or brought in any of these election plays yet. So
Oh
it's just
yeah.
like the entire focal point has been just a basis on Fed policy here.
Yeah, without a doubt, that's I'm think what will happen after we get through tomorrow. You'll start to see everyone talk about what's the election plays. I think part of that too is that the prevailing thought right now, of course, is that the current administration, while it's Kamala and not Biden, stays in, the same plays that are in effect now sort of stay in effect, as opposed to if Trump takes that. Um, so I think that plays into that a little bit also. Um, yeah, it's going to be interesting to see. Like you said, if they do go that 50, that's going to be a big thing. I'm more interested in what they say than what they do.
Agreed.
Too. Will they give us
Agreed.
any kind of forward look? They haven't really done it very well. The last time they did was when they were very honest and said, "Hey, we're not cutting yet." Stop.
Right.
It was almost like the stop asking me, stop asking me. We're not there yet. We'll let you know when we're there. Don't call me. I'll call you. And so that's what I want to see because for all the joking we make about Jay Powell, and I don't agree when he's sort of made decisions. I agree with most of the decisions when he finally got there. I think he goes kicking and screaming into most of them. He has been a calming influence into the market, though. He's done a pretty good job, in my personal opinion, and in those conversations on these Wednesdays of not spooking the market one way or the other. There's a couple that you couldn't have avoided where it moved because of him. As you know, a couple of times I played some interesting plays with Bitcoin based on the outcome, hoping for a big volatility, and then I just sat there and said, "Wow, that I lost 5 cents, I made 7 cents, but like it didn't move."
It's not the volatility you're looking for.
Yeah, I mean, seriously, I had all these great plays. I'd open the room up early and stuff to get ready for these things, and then the next thing you know, we're just sitting there like, wow, I just lost a transaction fee. That's good.
Kind of talking on your point here, Jay Powell's been very steadfast that when the time comes, they'll make the move, and until then, there's nothing for them to do. They're very adamant about the 2% threshold with inflation. They've been very adamant about looking for specific data points. They haven't given any timeline, and I think this is why, like, a lot of the anticipation comes into the picture. We as traders, what we look for is red line. Red line is when there's a change in their statement. So I don't know if people know this, but the FOMC statement is a literal copy and paste unless something changes, perception changes. Um, and there was actually in the last FOMC meeting a little bit of red line, and I think that's what's going to be very different tomorrow, is that there is going to be red line not only in the language, but there's a chance that they're going to have a revised dot plot. And again, that puts I guess the Fed behind the ball, but the market's also trying to wonder and anticipate what the Fed's going to do. We have the what I call the marching clown show, where voting members and non-voting members are always
Oh,
out talking about inflation and what their
they'll be
feelings and
everywhere
thoughts
this
are.
week. Everywhere.
Yeah, and then when it comes to voting, we find out that that's not really how they felt. That's certainly not how they voted. And so, a lot of that is going to be pretty transparent tomorrow, and maybe, especially as of late, over the last 30 days, the Fed members, especially the voting ones, have softened up a bit. They have come out a little bit more dovish than hawkish, and they're pretty adamant. I guess everybody except for Kashkari. This guy went from being the most dovish Fed member to being the most hawkish.
Yeah.
And so I don't know what's up with eyebrows, but he certainly is
I
deviating
wonder what his
from
trading
the
patterns
rest.
been.
Yeah, no, and again, I think, more than anything, it is time. Um, I think the Fed is going to move, very calculated. I think they have a really good idea based on the data that they're seeing, what they want to do for the rest of this year and going into next year. And that foundation is going to be really important because, SPX hit all time highs today, in light of what's going to happen tomorrow. And
And I think that's why I think that the downside is worse on the thing, because it's a lot easier to sell when you're in profit, right? And pretty much,
yeah,
unless you bought it at the exact moment, an hour and a half ago that it hit its all time high, in theory, when it goes up tomorrow, if that's the way it moves, you'll be in profit, because I know I see that in Bitcoin and in other cryptos. When we are at that spot, you get like almost an irrational slowdown period because people are like, you know what? I've made what I wanted to make. I'm out. So I wonder if we'll see a little bit of that tomorrow. Some profit taking in there too. And then Steve always talks about, I've always been against it, but he ends up being right more than not on this one, is that he calls it the day and a half rule. That what you see happening, so, tomorrow will be Wednesday, on Friday morning, is now the fully digested. Everybody from the smart money to the dumb money has digested it, and then you start to see the true movement that you see for the next week
yeah,
or two. So,
yeah. We always know that a lot of retail traders and investors are, kind of late in relation to, the party and the information, etc. And that always puts them at a, position where they're going to need pretty significant price movement. For example, if they hear about a stock on TV that's had a really good day, and I'm going to take over the projection if I can really quick.
hold on, I'm gonna do 1 second. I'll get you. Go ahead and share your screen, and then when it comes up, I can share it.
Let me see.
Hold
It
on
should be
one
sharing.
second.
It looks like it's sharing right now.
I'm sharing mine. I just got to change it over to yours. Give me 1 second.
Yeah, and I mean, again, this is, the cardinal rule is correct. That does make a lot of sense,
There
but
you go, Charlie.
the depth of what we're going to have here, this week is changes the tune quite a bit. And this is what I'm looking for, is this extended break through this threshold, and really, the linear regression mean. Howard, you and I both
Yeah.
know how stocks behave when they anchor above this level. We still have a gap fill to just even, be targeting as a bull to the upside. And,
Correct.
with the SPX breaking that high, why can't the markets? I'm sorry, my dog just jumped in my wall. Why, why can't the markets get into this proverbial risk on? And I think the risk on thesis makes a lot of sense if the markets are very happy about Fed policy.
Right.
All this, suppression and struggle by tech, this could just lead to just a huge extended and strong breakout. And in theory, with the SPX already breaking through that kind of threshold, we could just be in for a hell of a run for the next 6 months.
Yeah, I mean, our version, our view, Steve and I, is that we have some hiccups, but the way I look at it too is lowering the rates are going to help with the two biggest parts where the inflation is, in my opinion, right now: housing and cars, where there are two sort of bubbles that haven't really reversed because it takes a lot to reverse them, right? If you're in a mortgage at 3%, getting it down to 5 isn't going to help you all that much. Refinancing, it's causing credit card debt to go up. We talked about this morning. So, by doing it the way they're doing it in the bits and pieces, if tomorrow if they give you that right feeling and say that, hey, we saw X, Y, and Z move in the right direction. We feel that's accomplished, and what we're doing today is going to accomplish the following. Then you might really see that thing. So you're telling me they got to play the YOLO to both sides, huh?
Yeah, I'm here. Let me. Sorry, puppy. You know, I'm in this boat, right, Howard, where everything's been so short term. Where I'm even at a point where I rarely take swing trades now. I'm only focusing on day trades, right? And then now the market uncertainty, the war, we combine that with the Fed, we combine that with obviously when we look at it macro, it's not really great globally. Europe is still struggling. China's barely getting their, kind of their feet underneath them. And now we're in this status where, the leader of the free world, the United States of America, is at a junction where we could see a coin flip. So,
Yeah.
you know, I I haven't had I haven't had too many instances in my trading career where I'm going into a major event with absolutely no idea what the market's going to do, how it's going to react, and what the follow through is going to be. I really believe that we have these two paths that are being built out, but the story isn't even close to being written yet. And usually
Right.
there's a story, I kind of related to those books as a kid where you get to the end of the chapter, they'll say, if you pick this decision, go to chapter six.
I
You have
love
this
those
decision,
books.
go to, yeah. And I feel like we're in that kind of mode with the markets right now, so that there is no follow through chapter to go through. They still haven't written it out yet. And so
Yeah.
being in this situation and seeing this regurgitation, just seeing this madness overall, I don't know what to think, Howard. I don't know what to
Yeah, and
feel.
you always have a strong opinion on where we're at in the market, so that shows you. It
Yeah,
was
buddy.
funny because I was talking with Scott, earlier because I want to know why the VIX isn't higher, but he explained. He said looking more at the skew
Mm-hmm.
versus that, and was walking me through that a little bit better. But to me, that should be higher. And like you said, I think there's only two trades you can make right now: long-term trades where you have a thesis that it doesn't matter what happens tonight. In 8 months, we're going to be here, or B, you got to be day trading because, like you said, you the swings that can happen over a 1 or 2 day, you could have everything right, and a couple hundred pages blow up in Lebanon, and you've changed everything. So
How,
I mean,
by the way, whoever thought of that was
I said I'm
what an
definitely
awesome.
never gonna piss off the Mossad personally. I never wanted to anyways. But if that's not another reason not to, although the fact that they use pages, I mean, and I get it because there's no trackers on pages and things like that. You use old technology to avoid new snooping. But man, yeah, that was crazy. But yeah, it's anything like that. It's we've had just these weird events that have changed markets overnight. So I'm with you on that. Charlie, I know
And
you need to.
following up really quick. You were saying about the longer term thesis. Even that's difficult because we're at pretty elevated levels in the markets, and while a lot of these stocks aren't making all time highs, they're not that far off. Some of
Right.
them less than a couple of percent. Some of them maybe 10%. So even taking that shot as a long term investor is really difficult on these stocks because of the valuation. And so it's like it's
Yeah,
really
no, and
the
I'm not.
market
I
is
should
so
have probably
short term.
prefaced that. I'm not looking at those Nvidia, the Magnificent Sevens, any of those. It's more a cyclical shift for me into maybe consumer durable company, things like that, a play like that, or a Boeing that's gotten beat up, an SM, a super microcomputer,
Boy.
something like that for a
Yeah,
longer
yeah,
term.
yeah.
I think that company
Lulu.
isn't going to crash, and when it comes back, I think there. Yeah, I should have prefaced that because yeah, how do you say long term that how does Nvidia continue to do this? But like you said, don't fade the mosque either.
Nah,
Every time you
I've
make
learned
that
the hard way.
decision, it's a bad decision.
I've learned the hard way, Howard. I've
Yeah,
learned the
no,
hard way.
I know. Yeah,
TLMD
that's
right
yeah,
now.
I'm with you. It's definitely a different market right now. Um, because like you also see is that you know tech stocks at all time high, gold at all time highs. Those two things don't go together, right?
Right.
So
And
it's just
a lot of that again is in anticipation of Fed movement, anticipation of honestly, it's almost like it was a flight to safety as well. It's very we don't historically see longer dated bonds, gold, and the markets all pushing up higher
right.
at the same time. And now crude's starting to get into this equation. So it's just like again, the market mechanics are off. The things that traditionally, historically, have always been some sort of offset to the other or relative pricing action in conjunction with something else. Things have been different, and I don't know why the market mechanics are that way right now. I haven't really like tried to like break it down just because I've tried before and it never really made sense. And now there's maybe with the U.S. dollar, it's still a reflection of something that has to do with the yen or ties to the yen, ties to gold as well. Crude, obviously, with the Middle East, but ties of the economy, etc. And the inflation's coming down. How's that happening with crude and pricing of crude rising?
Yeah,
And
no,
so,
it's a crazy time, like you said, and some of them with those global markets also skew things. So if everything's going well here in the U.S. and superconductors are flying, China could be buying gold like you've never seen because things are hitting the other side there. So that part of it I do get, but you don't usually see it to the extent now. The other part is still a lot of money on the sidelines. Your boy Warren's got 300 billion now sitting there. He can buy a few things. He can buy every NFL team. He can buy the entire NFL.
yeah,
You know.
that's another thing I don't get. Like, why? What is he thinking?
Well, there too, a couple of things too is when it comes to some of that is buybacks get so much pressure right now from Congress and the senators and all that. So and he said it. He said, "I'm not buying back my stock if I think it's overvalued." And obviously, he's telling you that he only bought 345 million last quarter. Quarter before that, he bought 2.6 billion. So it shows you where his mind is too. That's what it gives me. That's also that little wary sign to me. He just basically thinks it looks like that almost everything's overpriced.
I thought I read that there was an insider at Berkshire that was selling too.
Oh, really? I did
Yeah,
not
I
see
mean,
that one,
why
but
wouldn't you take
he said it.
profits?
That makes sense. You know what I mean? Is again, that interview that really made sense to me because I was like, why are the buybacks down so much? He's like, yeah, I only buy what's of value. I'm like, yeah, he's made a $1 trillion company that way. I guess he knows what he's doing. If you got if you got a thesis, you stick with it if it works, right?
Yeah, never fade the buff.
Yeah, well, that's for sure. Charlie, I know you got to get back to the room there, sir. I appreciate it so much that you come on with us weekly. I'll probably check back in with you this week. We'll see what's going on towards the end of the week. See, maybe we'll get you back in for a 5-minute little thing to see how FOMC actually played out. And I appreciate it for the Disciple of Trend, Charlie Moon. I am your host, Howard Hondo Greenberg. We will see you guys later. Thank you so much.
Anything for you, Howard. You're the man.
Appreciate it, buddy.